Here we are on the Euro New Zealand 15-minute time frame, and you're currently looking at a flag pattern where we've broken out of the channel, and I've used it as an entry into a big head and shoulders, though I am playing for one target, and that is the flag targets. So what I'm just going to do here is let's remove everything off. Let's talk through this first of all, and then we'll go through the entries, stops and targets. So here on the daily time frame, not a huge amount. We had a break lower, a pull back, break lower, then we broke above, then a pullback. We have come into this level here, and we're now seeing some bullish movement up to the top, technically giving us a head and shoulders here. So you could see a very large move here to the upside. Not something I'm interested in. This head and shoulders isn't one that I can actively trade without a double bottom. Here on the 240 we have, right, this is where we see our head and shoulders. So we've got, right, let me just redo this. So I'm going to put a structure level in there, and you can see just here we came into that structure level, and we've been seeing bullish movement. Now last week I was looking at getting involved in this, but wasn't quite good enough for me, so I stayed out of it. But we have a left shoulder, a head right here. This made an initial structure high, giving us a potential rotation. We then pulled back, and this is where I looked at getting involved last week, just where we had this pin bar. Again, wasn't quite good enough for me, so I waited. And what we have then done is we've now started to see bullish movement. Now this head and shoulders then has a high probability of at least completing an AB equals CD pattern. So if we throw on this AB equals CD pattern, we know that price could potentially come up to this zone, which is actually this entire structure level across here. So we have that probability of getting up there. So if we know that we want to be looking for bullish opportunities, let's drop down the time frames and have a look. Now what we then have is this. We have a pole, and then we have this channel that's formed just like this. Now if I'm honest, this is not the best flag pattern for me. This is not how I trade them, but since we have two lots of confluence here, and what I mean by that is we have the higher time frame head and shoulders, and then we have this flag pattern that, if you look just here with this big higher high, higher close, has broken out of the channel. What we then did is with the next candle, this bearish candle, this red one, we came down into this structure level just here, and then from there we've now started to see with this bullish candle bullish movement. So I am going to drop down to the 15 and show you my entry. What I'm going to do first is just throw a fib on this pattern. Okay, then I'll drop down to the 15, but just bear in mind we had this higher high, higher close, and the red candle came back down into the trendline structure. So if we drop down an additional time frame, we can then just simply look for a higher high, higher close candle. So quite aggressive this in terms of the entry, but because of the additional confluence we've got, that's where I have the additional safety. So okay, so here you can see right here this was a higher high, higher close entry, and stops have gone an ATR below this swing low here plus 2 pips, and that means then that targets are up here at that 127 fib extension. But if I just zoom out a little and pull this down, you can see that price can actually go a lot higher to complete this AB equals CD pattern. I'm not doing that, and the only reason for that is because of my entry. And what I mean by that is my entry is here. So if we were to hit first targets, this up here, I would then move my second position to break even would be here. For me, this isn't in a great position. I have a higher probability of price coming back and stopping my second position out than it does holding it for the completion of that AB equals CD pattern in the head and shoulders. So still a very good opportunity, but I like to have the highest probability of getting secondary targets. So for me, this is a 1 in, 1 out. So then in terms of risk, we're looking at this much. We'll do that one red as usual, and the reward is going to be in green. So you can see I have a favourable risk to reward here. And in terms of the pip amounts, we're looking at 38 of risk and 57 of reward, so well over a 1 to a 1.5 risk to reward there. We're back for an update on this trade, and what we've done now is we have here on the 15 put in a new high just here. I cannot implement any type of risk management here, even though we have now entered trend continuation for me. It's just a case of waiting until we get up to those targets. We're back for the final update on this Euro New Zealand trade, and have just been stopped out here now for our position, which is a real shame, real shame. We got the breakout, we came up to retest these highs up here, and instantly we saw a big reversal, and my stop was obviously just below this level here, and I was using that flag pattern for the breakout into the head and shoulders. Just didn't happen. Problem now we have is that 1, 2, 3 tests we've had up there, and that means for me I don't have anything where I can enter to try and break this level to complete the head and shoulders. So losing trade there for 38.